Hey guys, welcome back. In today's video, we are talking about how AMC is beating short, the consequences for the short sellers, the dark pool orders, and many more in this video. First, we take a look at this. While we wait and next year AMC becomes insanely profitable with the biggest box office in history, let's remember Citadel needed $1 billion loan since, another $500 million one, and they sold off part of their company for the first time in history. Yes, we did that. So to recap, essentially people who don't know, we're seeing how Citadel, despite being profitable, needs to raise money by whether it's selling bonds, by these money raising in order to pay the investors. Now understand that we talked about that they had a profitable year, or at least on paper they've had the profitable year, but yet they can't take the money out to pay the investors, but actually needing to raise the money to do so. So that's obviously what we talked about in terms of how short sellers are not actually how they make themselves look like. While these short sellers claim that they're profitable, that they're making billions of dollars, the actual truth is they are trapped their money within positions that they can't take out. And even if they do have free cash, they need to park it in order to fit the margin requirement, because they're over leveraged on their short position, whether that's AMC or GME, and that's where they are at. And so when we talk about beating shorts, when we talk about trapping the shorts, that's exactly what AMC is doing. And one of the biggest part about this in terms of how we are able to achieve this is because of the fact that AMC is still alive, because of the way it's of course operating. One of the things that we always said, AMC needs to stay alive for the short sellers to be trapped, because if AMC is bankrupt and no longer listed, then the shorts don't have to pay back the shorts. They don't have to cover the shares. But if AMC is able to stay alive, it's able to attract more people with its fundamentals, then we are only going to make the shorts create more synthetics and not actually being able to cover the synthetics. So every single day they have to dump more money in without being able to cover, and that's how they are trapped in this play. And remember, this is AMC doing this. This is, of course, what we have always been part of. The fact that none of us has ever sold obviously shows that we have trapped them in this corner. And so this is when we go to the next thing, which is understanding we need real consequences. And I think this year we have, or at least the next 4 years, we have a big chance of actually seeing this happen. So you can see we need real consequences. The financial industry has been playing these shell games for years, and it's basically an open secret. Citadel got slapped with a $7 million fine, which is basically pocket change for them. So when you take a look at here, and we're seeing how Citadel Security was fined $7 million as part of a settlement with the SEC, addressing mismarked short and long sales caused by a coding error in the firm's automated trading system. Now, whilst they claim that it was obviously a coding error, I do believe that, what we can talk about is that it's very likely to be intentional, because multiple firms have done that. Now, the important thing about this is understanding that because of these mismarked positions, they were able to make hundreds, if not billions of dollars, right? And so, when we take a look at the fact that they could have made hundreds of millions or billions of dollars, but yet they only had to pay a $7 million fine, clearly it is not a good enough consequence, because I'm sure when everyone's given the opportunity, if you only had to pay $7 million in order to make $500 million, I'm sure anyone would be willing to pay that. And so this is what we talked about with the consequences not being harsh enough. Now that Trump is obviously in administration, now that we are, of course, seeing different people coming in right now and a new SEC, what we could be looking at is actually a harsher consequence. For those of you who obviously know, DJT was another stock that obviously suffered from short selling. So it could be very likely that we are going to be seeing some regulation, some rules directly targeted at the short sellers. And that's something that needs to be done if we want to see more transparency and equalness in the market. Because when you take a look at some of the other things, you can see derivatives must be regulated, no more FTDs, where we take a look at first this picture, banks ranked by derivatives. And what you can see here are some crazy numbers where we're looking at JP Morgan Chase Bank, $57 trillion, Goldman Sachs 49 trillion, Citibank 45 trillion, and the list kind of just goes on. And what we're looking at is that even the lowers are still in the billions of dollars, and of course the highs are in the trillions. Now, this is exactly what we've seen covered and talked about in the past, where we understand is that because of these derivatives, because of the fact we are able to see this, what we can see is how the shorts are extremely over leveraged. And this is why we talked about in terms of why they need to always manipulate the stock, why they always feel the need to continuously, whether it's the FTDs, whether it's the swaps, whether it's the mismark of short into longs, that's why they need to do this. And you can also see 4 types of failures to deliver, which are depressing price, naked short selling, abuse of the option market make exemption, unsettled offshore trades called failure to receive, unsettled long sales. And this is something that we have seen all 4 of those, and of course even more that are out there are all tactics and options used to short and suppress the price of AMC. And that's exactly what we're seeing. But like we said, we need to see harsher consequences in order for these to completely go away. But it's also an indication of understanding precisely the fact they need to do this shows that they are still trapped in this play. Now, let's take a look at this. And this is a big proof of understanding how they're still trapped in this and why AMC and GME are both in the same positions. So firstly, you can see dark pools were never meant to be used for retailers buying a few shares, and yet hedge funds increasingly trade offline in their non-reporting, non-transparent dark pools, removing all buying or selling pressure to help their short or long positions. Now, you can see this is an article we covered. For the first time, the majority of trading in US stock is consistently occurring outside the country's exchanges, aka dark pool. And when we talked about this, when trades are in the dark pool, it doesn't have an effect on the price, meaning we could be seeing hundreds of millions of dollars flooding into a stock, but if it's in the dark pool, it won't have any effect. And if we were just to see even 1 or 2 million volume into shorting or selling the stock, and it could actually just drop because it hit the lit market. And so that's an understanding of how powerful the dark pool can be. And when you take a look at this, biggest GME buy of the day, near $700,000 order is routed via dark pool. Meanwhile, the largest sell order hits lit exchange. So already you can see, in the difference where we're seeing how a massive buy order is obviously routed into the dark pool, and then a massive sell order is routed into the lit exchange. And now, like I said, even though we had this 700,000 buy order, it wouldn't have any effect on GME price because it's in the dark pool. But because we've had this 408,000 and it's hitting the lit exchange, it would have a price affecting. Now, normally, when you take a look at this, obviously the net volume is more buys than sells, but because one is in the dark, one is in the lit, only the lit one will have an effect. And that's why we will see more bearish value and more bearish volume coming in because it's in the lit exchange. And so this is what we've talked about with the fact we need to stop and we need to see why that hedge funds are using dark pools, which shows the fact that they are obviously trapped in this whole thing. Otherwise, they won't be needing to do this. Another thing you can take a look at, so May 2020, relatively the same times for GME, I called in my lent out GME shares. It took my brokers weeks to find my share. I cannot even imagine the shitstorm in settlement right now. They may have to extend delivery timelines. So this is obviously talking about the difficulty. Now this was for both AMC and GME and some other stocks back then. And obviously we knew the reason why. But a big thing is because now we're seeing a Fidelity user is claiming GME has been slapped with a hard to borrow warning. It would be a total shame if they were scrambling to locate a massive share recall behind the scenes. So for those of you who use Fidelity, feel free to obviously check it out for yourself. Comment down below in terms of what you guys think, in terms of are you guys also seeing the same message? But like we said, even back then that they were able and struggling to find shares of GME, now that they created synthetics that have been bought up, now that there are even a lot more shares that they need to find and settle and locate, it isn't a surprise they're finding difficulty to do this. But like we said, what we could be seeing is that behind the scenes, they are actually trying to recall the shares. Now, recalling the shares will obviously be a massive move. And the biggest reason for this is because it will screw up both the brokers and the institutions. When they recall shares, it's in terms of brokers recalling it from the institutions. But if what we're seeing is that the institutions don't have the shares and the brokers originally lent out shares that they didn't own as well, then you can see how they need to try and find it from somewhere else. They will require other people to sell their positions. They will require other people to, find a certificate. They will have to do all of these things. We've seen this in the past with MMTLP, and what we could see is obviously on an even bigger scale with AMC and GME, and that's how the squeeze will obviously happen. And you guys, thanks for watching this video. I'll catch you guys next time.